Hello, everyone. My name is Daniela Cantera, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you would like to read any more about what John writes on a regular basis, you can head to incomeinvestors.com or you can click our link in the description below. The outlook for shipping companies have turned bullish after Israel bombed Iranian nuclear and military facilities, with Iran launching retaliatory missile attacks. After years of simmering tensions, it could be just the start. An escalation of military action in the Middle East has forced shipping companies to be extra careful as marine vessels travel through the Strait of Hormuz, the world's primary oil choke point. The broader marine shipping industry fear a major disruption to oil supply from the Middle East should the escalation continue for a prolonged period of time or even escalate further. The worst thing that could happen could be Iran closing off the narrow Strait of Hormuz, the most critical shipping lane in the world. Every day, 25% of global oil, 20% of global LNG pass through the channel. Don't forget, there is still tensions in the Red Sea too, with the Iran-backed Houthis choking off shipping in the Red Sea and Suez Canal, two vital trade routes from oil and gas between Asia, Europe, and North America. This broader uncertainty in the Middle East should result in continued strong time charter rates for marine shipping companies like Hafnia Limited, traded on New York Stock Exchange under symbol HAFN. So, John, what can you tell us about Hafnia Limited?
Thanks, Daniela. Yeah, if you're not familiar with Hafnia, you're not alone. Hafnia only began trading on the New York Stock Exchange in April of 2024, I think, but has been trading on the Oslo Stock Exchange, or OSE, since November 2020. Now, operating a fleet of over 200 vessels, Singapore-based Hafnia Limited is the largest operator of product and chemical tankers in the world. The majority of its vessels operate in the spot market, primarily through pools of similarly sized vessels. Now, this allows Hafnia to maximize fleet utilization and revenue and cyclical freight rate recoveries. Now, the company transports everything from clean and dirty refined oil products, vegetable oil to oil companies and chemical companies, as well as trading and utility companies.
And how did it do in the first quarter?
Pretty solid, all things considered. During the first quarter, Hafnia experienced an increase in trade volumes and ton miles. Now, this was supported by strong global demand, resulting in an improved spot market. Management noted that industry sentiment has improved further in the second quarter, setting the stage for a, and I quote, robust remainder of 2025. Now, Hafnia reported net profit of $63.2 million, or 13 cents per share, and that's down from $219.6 million, or 43 cents per share in the same prior year period. Time charter equivalent, or TCE, earnings were $218.8 million, and that's down from $378.8 million in the first quarter of 2024. That ended up with an average TCE of $22,992 per day. Now, those results might not sound spectacular, but its results were negatively impacted by a significant number of vessels undergoing scheduled dry docking or repairs. This led to approximately 500 off-hire days during the quarter. The company said that with a significant portion of its fleet built in 2015, it anticipates a similar level of dry docking and repairs in the second quarter, resulting in approximately, I think it's like 630 off-hire days. Now, as of May 1st, 2025, 57% of the company's second quarter earning days were covered at an average of $24,839 per day, and 27% was covered at $24,902 per day for the second quarter through to the fourth quarter.
If you like what you see so far, check out incomeinvestors.com. While you're there, you can also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can also find the link to our website in the description below. And now back to the video. It increases first quarter dividend to 0.1015 cents per share.
Yeah, now on the dividend front, Hafnia announced total distribution of $50.6 million, or, as you noted, 0.1015 cents per share, or 91 cents per share on an annual basis, for a pretty frothy forward dividend yield of 17.10%.
And HAFN stock has made really big gains since April.
Yeah, now since being listed on the New York Stock Exchange, HAF stock has done actually quite well for the most part, hitting an all-time high of $8.99 per share on May 31st, 2024. Shipping stocks hit some rough water in the last quarter on geopolitical tensions and weak demand from China. The broader market again hit further turbulence in early 2025 and again in early April on concerns about what a global trade war could do to the economy. Now, HAFN stock has rebounded significantly from its April lows and is, as of this recording, up 8% over the last month and 32% over the last 3 months at around $5.70 per share. Big gains, but Wall Street thinks more moves to the upside are in store for HAFN stock. Analysts have provided a 12-month share price target range of $8 to $10 per share. The latter price, of course, would put HAFN stock in record territory.
Thanks, John, for your insights. Hafnia Limited is a marine shipping stock with the largest fleet of product and chemical tankers in the world. It reported solid 2024 results with TCE rates higher than they were in the fourth quarter of 2024. While the second quarter will face the same kind of temporary dry docking and repair challenges the company did in the first quarter, the back half of the year looks solid. That's good news for HAFN stock and its reliable dividend. It's also encouraging for the 194 institutions that hold 22.35% of Hafnia shares. Some of the biggest institutional holders are Arcadian Asset Management, Vanguard Group, and JP Morgan Chase and Company. An even larger 45.12% of shares are held by insiders. The high insider ownership entices the company to deliver strong results. That's it for today, and make sure to go to incomeinvestors.com to get our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. Or you can click the link in our description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.